Well, first of all, I don't think we're approaching double-digit inflation. I think we're already there. I think that if the government was still reporting inflation the way they reported it in the 1970s, month-over-month number that we just got, which went from 9.1 to 8.5, I think it would be well north of 15%. If we kept score, remember, back in the 1970s, they didn't use owner's equivalent rent. They used home prices. They used actual rent. Well, year over year, those things are up 15 to 20%, whereas owner's equivalent rent is up like 5.5%. That's a third of the CPI right there. That is dramatically undercounting the cost of shelter. But we also have things like substitution that we didn't have back then. Back in the 70s, the basket never changed. Now, they just keep changing the basket. They take out stuff that went up and they put in stuff that didn't go up as much. So the whole thing is manipulated. So we have double-digit inflation. We're just not being honestly told that we have it. But you go back to those gas lines of the 1970s, that wasn't the result of inflation. Higher gas prices were the result of inflation. The lines and the shortages were the result of price controls and stuff like that, which the government may in fact implement again. But Americans have been living with inflation for over a decade. It's just that the inflation didn't show up in a dramatic way on consumer prices until more recently. Because all of the monetary policies that we have pursued since the 2008 financial crisis, it can all be summed up in one word: inflation. Inflation was deliberately created, not only by the Federal Reserve, but by the ECB, by the Bank of England, which, by the way, today actually reported 10.1% year-over-year inflation, and the Bank of Japan. Quantitative easing is simply another word for inflation. What is quantitative easing? Printing money and buying government bonds. That's inflation. Inflation is an expansion of the money supply. That is literally where the word inflation comes from. You get an old Webster dictionary, and you can even find these on the internet, and you see how inflation was defined. And it's defined as an expansion of the money supply. Prices going up are just a result of inflation. But the government really wanted to change the definition of inflation from an expansion of the money supply to an increase in prices so they can confuse the public as to the source of inflation. Because if the public realizes that inflation is expanding money supply, well, they know exactly who's controlling the money supply. But if they think inflation is rising prices, the government can blame it on the people who are raising prices, greedy businessmen or Putin, right? Or somebody like that. Right. They can point fingers at everybody, but accept responsibility for themselves. So the government has created the inflation. And by the way, the Inflation Reduction Act will result in even more inflation being created by the government. The difference is that for years and years and years, the inflation that entered the economy predominantly affected asset prices. So why did stock prices go way up? Inflation. Why did real estate prices go way up? Inflation. Why did bond prices go way up? Inflation. Why did the price of, antique cars or, art, why did everything go up in price? Inflation. Why did cryptocurrencies go up in price? Inflation. The Fed inflated these massive asset bubbles with all the money that it created. But as I was warning, going back to day one, when they first did quantitative easing, when they did QE for the first time, they didn't call it QE1 until they had QE2. But when they did the first QE, I said that there would be a QE2. I said there would be a QE3. I said back then that we would have more QEs than Rocky movies. We've now had 4. QE5 is coming up. That's how many Rocky movies we had. But the reason I knew the government would keep repeating it is because I knew it wouldn't work. All they would do is blow air back into a bubble, and then every time the air started seeping out, they would want to blow more back in. Because QE doesn't solve the problem, it exacerbates the problem. But now the problem is that all that monetary inflation has now worked its way through financial assets, and it has ended up where I always knew it would, in goods prices, consumer goods, producer goods, and this is where it's going to stay. And if the Federal Reserve goes back to QE again, which I think it will, because we're already in a recession and they're going to try to stimulate the economy at some point, especially when we really start hemorrhaging jobs again. When they go back to QE, it's not going to look anything like the previous doses. We're going to have an explosion in consumer prices because inflation is already well above their so-called 2% target. And if the Fed throws gasoline on this fire, even with inflation 3 or 4 times its ceiling, the markets are going to react very differently. I think we're going to have a crisis in the dollar. I think the dollar is going to crash. And I think bond prices are going to soar. It's going to be a sovereign debt crisis. And so it's going to look a lot different than what we've experienced in the past decade or so. Well, I don't know. I mean, I'm sure there are some people somewhere in government or at the Fed that knew this and just lied about it. But I'm sure there's so many incompetent people there that no, they didn't expect it. They're so clueless about economics, about inflation. And so they're just surprised. But the whole purpose of the policy that we've pursued, it's just kicking the can down the road. We've got this huge problem and we don't want to deal with it. Why does no politician want to deal with it? Because it means if they deal with it, they might not get reelected. Because you don't get reelected by being the bearer of bad news, right? There's an old saying, don't shoot the messenger, right? So nobody incumbent, no politician, no central banker wants to level with voters about how bad things are and what they actually need to do in order to correct the problem. What they want to do is kick that can down the road because then they can get past the next election. And so that's all we've been doing. But every time we do that, we make the problems that everybody is afraid to deal with even worse. And now they're even more afraid to deal with them because the consequences of doing it are even worse. So again, the can keeps getting kicked. But at some point, you run out of road, right? Or the can is simply too large and you can't kick it anymore. And, we got to be there. We got a $9 trillion Fed balance sheet. We got almost 31 trillion in national debt. We've flooded the economy with money, and we've really kicked it into a higher gear with COVID, when we had the worst combination of monetary and fiscal policy I've ever seen. And I called out the Fed and Congress in March of 2020 for the asinine policy response to COVID. They, on the one hand, they ordered businesses to shut down and workers to stay home. So they ordered a big reduction in supply. At the same time, they flooded the economy with cash to increase demand. In fact, they were dumb enough to send checks to people who were no longer working that were 2 or 3 times as large as the money they earned when they were working. So we had less supply, we had tremendous demand, and of course, prices went straight up, the opposite of what they should have done. The government should have cut spending during COVID. This Federal Reserve should have shrunk the money supply. If we were going to stop production, which was a mistake, I never believed we should have shut down the economy. I think it was an overreaction to the COVID. But if we were going to do that, if we really thought it was necessary to shut everything down and everybody stay home, then we also needed people to stop spending.